Disability insurance, protecting your income from life's unexpected events. In this section, we will discuss the need for disability insurance and the key features of disability insurance policies. According to the Social Security Administration, being disabled is defined by 3 requirements. 1, you cannot do the work you did previously. 2, you cannot readjust your skills because of your medical condition. And 3, your disability is expected to last at least 1 year. This is considered an any occupation definition, and it's quite difficult to qualify for. Most insurance companies will use a more lenient definition around your own occupation, meaning you would be considered disabled if you are unable to perform the duties of your own occupation. For example, if you're a surgeon and suffer from arthritis, you may still be able to hold a job, but not likely as your own occupation as a surgeon. During your working age years, the likelihood of becoming disabled is 2 to 3 times greater than the likelihood of dying before retirement. The odds are slightly better for women, but the fact remains that disability is a more likely event, and therefore disability insurance should take priority over life insurance in most cases.
Answer verbal question 1 now. Which type of insurance should take priority over life insurance? Answer question verbal 1 now.
A disability can stop your progress towards financial goal achievement in its tracks, not only because of an immediate loss of income and large health expenses, but it also erodes your human capital. Fewer than 40% of Americans report that they could pay their bills if they became disabled. However, less than half of U.S. workers have any form of disability insurance coverage. There are 2 forms of disability policies. Long-term is the most important, but you generally want to carry both long-term and short-term. Short-term policies will replace a portion of your salary for up to 12 months. Then a long-term policy would then kick in after the expiration of the short-term policy. To calculate how much short-term disability insurance you need, multiply your current gross income by 0.65, then divide this by half to determine your short-term need. If you don't have this amount in a savings account for emergencies, you should consider purchasing a short-term disability policy. Most disability policies are offered as part of an employee benefit package, through which you can obtain the most cost-effective policy, and payments can generally be auto-deducted from your payroll. However, to give yourself an estimate of costs, if you are healthy and working in a low-risk occupation, your annual premium is likely to cost about 1% of your annual gross income. If you are unhealthy and working in a low-risk occupation, your annual premium is likely to cost you about 2% of your annual gross income. If you are healthy and working in a high-risk occupation, your annual premium is likely to cost about 3% of your annual gross income. And finally, if you are both unhealthy and working in a high-risk occupation, your annual premium is likely to cost about 4% of your annual gross income.
Answer verbal question 2 now. If you are healthy, working in a low-risk occupation, multiply your insurance needs by which percent? Answer verbal question 2.
One last thing is of importance regarding disability coverage. Workers' compensation provides benefits when you are injured or become ill as a result of your work. Every state requires employers to pay into a state-managed insurance pool to help pay claims made by injured employees. There is no direct cost of this coverage to workers. Test your knowledge of short-term disability insurance policies by answering this question on your own.
Answer verbal question 3 now. A short-term disability insurance policy is designed to pay benefits for a maximum of blank. Answer verbal question 3 now.